Welcome back. You're watching The Money Show on ET Now. Thanks so much for tuning in. On this segment, we are actually going to talk about your equity portfolios and specifically what's been happening over the past several weeks. Interestingly, we've actually recovered quite sharply from that big fall that we saw on Friday. The first 3 days of the current week have been quite good for the equity markets, but what has been happening has been over the past several weeks, you've seen that the broader markets, that is the small cap index and the mid cap index, have been outperforming the large cap. So does that mean that what we saw in 2020, that is the theme of quality, is slowly making way for the theme of value? And is value coming back? That is the question that we will seek to answer right now. And joining me to answer those questions, hopefully, is Amol Joshi, the founder of PlanRupee Investment Services. Thanks so much for joining me, Amol.
My pleasure, Alex. Thank you for having me on the show.
Amol, you've been watching this market for quite a while now, and I believe that we spoke multiple times in 2020 when we clearly identified that the theme, the ongoing rush towards quality, was something that was very apparent. Are we seeing a shift now?
Alex, at this stage, I can certainly say that if you look at 1 year returns for equity, and I'm not advocating, we have been speaking for it quite some time. I'm not saying equities for 1 year horizon, investment horizon via the MF route. But still, since you mentioned the happenings of 2020 earlier, large cap index has generated around a 30% return. At the same time, the mid cap and small caps have generated in excess of 40% returns over the last 1 year period. That certainly gives us, or shows us rather, the shift. Mid caps and small caps continuously fell after 2018 budget, when the long-term capital gain tax was brought back from 0% to 10%. That cycle has clearly turned, and mid caps and small caps are outperforming large caps, and in my opinion, are likely to do so in near future as well.
Okay, let's talk a little bit more about that. And I also want to get your view on the occurrences of the preceding week, right? So on Friday, you saw a major correction and you saw that getting bought into. Is that something that you think is going to keep happening? Because I think that is an important point to make if we're talking about buying value at this stage. Would you say that there's a likelihood going forward that all of these dips continued to get bought into?
Well, Alex, as a mutual fund investor, typically you would not be looking at it on a day-to-day basis, but on a broader level, yes, these kind of dips, we have seen them happening. And see, the thing is, the dips, so to speak, 1,000-point dip today on a BSE Sensex is probably a 2% dip only. Just because the absolute numbers play a much bigger role in probably grabbing the mind share of people. But suffice to say, over last several months, there have been several instances, something like second wave of the COVID-19, something like the rupee-dollar equation getting upset, sometimes the gold hardening or the prices shooting up for gold, affecting other asset flows into other asset classes. And one of the important factors, since we are talking about mutual funds, is the kind of outflow that we have seen from mutual fund space over last few months. Many of these things have resulted into a market, a kind of panic for a few days, or like you said, the dips. But those dips invariably got bought into. And as you rightly mentioned, I think with today's upswing, the Friday's fall has probably been completely to use the word filled up and then some. So I would certainly feel that this with mass vaccination drive starting not just for the frontline workers but for general population, the lockdown, there are no signs of lockdown on the horizon as such, and the GDP projections, what we are seeing, Indian economy is likely to grow at high double-digit rate after a long period of time. I think all these things together will give rise to the value buying, as you said, and beneficiaries of that could certainly be mid-cap and small-cap stocks, Alex.
All right. Now, I do want to get a view on what you think the ideal strategy should be, because we saw a bit of a, shall we say, a hiccup with regard to multi-cap funds. And I think a lot of advisors were saying if you want to have a diversified portfolio, perhaps you should consider doing multi-caps. But then that shifted now and people are talking about Flexicaps as an option. Would you say that Flexicaps are a good option to consider even today, or would you say that you would rather advise that people go into mid-caps selectively, mid-cap funds selectively, and small-cap funds selectively?
Thanks for bringing this up, Alex. Flexicap, as we all know, is the latest, newest, freshest category of equity funds. Flexicap, as the name suggests, will have fund manager will have a complete say in what kind of large cap allocation fund manager takes, what kind of mid cap and small caps. Now, this is nothing but at one point in time, multi cap funds used to behave like that. However, multi cap funds now have restrictions of allocating equal proportion to large, mid, and small cap stocks. So I would say anybody who wants to participate into mid cap and small cap space, multi-cap, flexi-cap are option. These options are open. However, if you are keen to participate specifically into without disturbing your other allocation in large caps, what you will have. And let's not overlook that point. Large caps will still be a lion's share of your portfolio. Large cap will still be a bigger allocation in your portfolio as a mutual fund investor. But if you want to play into the benefit from the mid cap and small cap upswing, I would say you look at dedicated mid cap funds and small cap funds. After the categorization of 2016, there have been a lot of fund launches as well as existing funds that have revamped and that invest only in category of only in capitalization of mid and small cap stocks. I think you are better off looking into those funds.
Now, Amol, before we go further into this conversation of mid-cap and small-cap funds, I do want you to tell me what your picks in these two categories would be, because I think our investors or our viewers tuning in would benefit from that.
Sure, Alex. So, as we have discussed, I would just kind of give out few names. I would say that HDFC mid-cap opportunities looks a good bet. Even at this stage, it is one of the largest mid-cap funds of the industry. Again, in mid-cap segment, you could look at ICICI Prudential mid-cap fund. This mid-cap fund has been, allocating to value segment, and since you have been focusing on value theme during this part of the show, and I want to give out the third name as a mid-cap index fund itself. If you do not want to be bothered about the fund manager's allocation, whether fund manager's call goes right or wrong, if a fund manager is bullish on pharma and pharma doesn't move for several months, if you do not want to be bothered about all the intricacies of choosing an actively managed fund, you can also look at something called as a Motilal Oswal Mid-Cap 150 Index Fund. This is about mid-cap. And in small caps, again, you can look at SBI Small Cap, one of the better managed funds, one of the largest funds in the small cap segment. My second nomination in the small cap space would be IDFC Emerging Fund. It is a kind of new fund. It doesn't have a 3 or 5 year history, but suffice to say that this fund since the beginning has been participating or investing into sectoral rotation theme or cyclical theme, and cyclicals have definitely benefited. You would have seen metal space today as well as last several months metals have been doing well. So cyclicals is something IDFC has been bullish on. So that's my second pick, and I will stay with the theme of recommending index fund in the small cap space as well. Here you can look at Nippon India Small Cap 250 Fund, Nifty Small Cap 250 Fund. So these are 2-3 funds in each of the category that comes to my mind, Alex.
Understood. My last point here, and I just want to close this conversation on that note, Amol, is that you mentioned that large caps should still be a large portion of your portfolio allocation. But having said that, I just want to understand from you, small caps are not necessarily for everybody, right? How would you know that this is something that you need to consider? And in an ideal situation, what should your allocation look like?
Okay, so typically I would say typical investor is better off investing into 70% large caps and remaining 30%, let's say 20 plus 10 into mid and small caps. If you are an evolved investor, if your investment horizon is let's say 5 years or more, preferably 10 years and more, then you can probably look at something like 50-50. So 50% in large caps, 30% in mid cap, 20% in small cap. But see, Alex, always we should always remember, and I mentioned about the 2018 fall into mid caps and small caps. It will not be out of place to mention that during that fall, from February 2018 all the way to mid 2020s, 2.5 years, small caps suffered around 65% of loss from the headline value. Meaning, if you invested 100 rupees in small cap at the peak of 2018, then your valuation dwindled down to something like 35-40 rupees. Small caps are not for everyone. Thanks for pointing that out. If your horizon permits you, and if you're not going to be perturbed by the volatility for extended period of time, by volatility, I mean the capital loss scenario, although it would be a paper loss. If you do not redeem your funds, it will be merely a paper loss and you will benefit from the upswing as and when it takes place. But unless your risk appetite allows for it, and unless you have long-term horizon, investment horizon ahead of you, I think you are good with 70-30. If not, then 50-30-20 is something that you can look at.
Lovely. Thank you so much, Amol. It's been a comprehensive conversation and I hope our viewers have benefited from it.
My pleasure,
As always,
Alex.
a pleasure speaking to you. Now, I do want to turn to something else on this show, and it's something that has been a theme all of this week. PSU stocks have been in focus. In fact, since the conversation around divestment and privatization started taking place, we've got an ET Now insight that my colleague Jayesh did on PSU stocks and why they have been in focus, specifically on PSU mutual funds.
So recently what we have seen is that the narrative has changed from momentum investing to value investing, and that is exactly where the PSU theme comes into play. If you have a look at the index performance, in the recent times on a YTD basis, both the PSU bank index along with the PSE index have been rank outperformers as compared to the Nifty. But if you look at the 1 year performance, there has been an underperformance, but that's the margin of underperformance has been a little less. However, if you have a look at the 3 year and 5 year performance, the underperformance is quite stark as far as the PSU basket is concerned. But let's also have a look at some of the mutual funds via which you could actually play out the PSU theme in case it is difficult to do stock specific action at your end. So there are three mutual fund schemes in India which allow you to play the PSU theme. One is the Aditya Birla Sun Life PSU Equity Fund, then you have the SBI PSU Fund along with the Invesco India PSU Equity Fund. The YTD performance has been quite robust, more than 15 to 20% is what all three schemes have generated. On a 1 year basis also the performance has not been bad at all, because the returns have been about 20 to 36%, while on the 3 year and 5 year basis the Invesco India PSU Equity Fund has been the rank outperformer, about 20% in the last 3 years and nearly 86% return in the last 5 years that it has delivered for itself.
All right, another theme that you have to watch out for. It's been an absolute pleasure bringing you this show from all of us here at ET Now. Thanks so much for tuning in. Do stay tuned though. We've got Startup Central that starts in just a short while.